The pipelines are really come down in the last 2 quarters. So last quarter was our first negative growth on the loan side. 500 basis points of rate increase has really stressed the sector. So as we look at the loans that are coming through, we see less loan demand and less that can really hurdle in this environment. We look at how will it perform through the environment. So even though we're at 500 basis points, we're still looking at we could see another 100 to 200 when we underwrite the loan. We don't think that's likely, but we also didn't underwrite loans 3 years ago expecting it to go up 500 basis points. And so it's a lot harder right now in this environment to originate loans that we think will make it through the cycle.
We talk a lot about where is the growth potential for some smaller banks, particularly in the profitability sector. And I was speaking with you offline and I said, where's growth? And you said, growth is a dirty word. Why is it a dirty word?
Well, for investors right now, growth in banks has been kind of tainted with the Silicon Valley failure, Signature failure, as well as First Republic. Those banks grew really quickly. And so as we're out on the road talking to investors, we're doing conferences, they're nervous about growth in banks too quickly. They see a lot of banks, as John mentioned earlier, selling off portfolios, shutting down some of their product lines, and they want to make sure the banking system is strong and stable. So our investors look at growth in this environment, a 550 basis point Fed fund rate as a little bit risky. And so as we are looking for loan growth, we're still hoping, we still are out there meeting our clients' needs and picking up market share. It is harder, as I mentioned earlier, and the investors know that. So when they see someone that's picking up a lot of loan growth, they know that there's probably some risk to that. You guys have been talking about it more than I have, but nobody knows where interest rates are going. And so how do you have a lot of loan growth right now not knowing what that interest rate environment to underwrite to?
We talk about it far too much. We've been talking about M&A all week as well. Is this going to be the year of the regulator or the year of M&A?
I wish I knew, John. I don't think there was many banks more surprised to see a big deal go through than First Horizon. We were in May of this past year. We were a deal that was terminated after 14 and a half months of working with the regulators, going through the merger application process. The same week that First Republic failed, we were told that we were not going to get approval for our deal to happen. So we're really excited to see a new deal come through. This is the first big one since the TD First Horizon was terminated. And we're going to sit on the sidelines for this one and run our bank, but excited to see what happens. There's 2 things we're really looking at in the banking industry with this deal, which is, one, how quickly does it take? We used to see bank mergers go through in about 6 to 9 months. And the 2 before us that did get approved, they took 12, 13, and 14 months. That's a long time for an organization to be looking at a merger. So we'll be looking at, 1, the timeline, but 2, how easy is it to get a merger approved in this regulatory environment? And nobody knows right now. And this is a big one. So we're all anxiously watching to see how this one plays out.
Well, what your potential deal with TD has in common with this Capital One Discover deal is some of the calls from Congress saying they should block this. Elizabeth Warren came after that deal. She's also saying the same about this. So where does that leave the idea of M&A in the banking environment? Do you think in this environment it actually gets done? Kroger can't get done. Why would Capital One be able to get done?
I hope they can get it done, but we are sitting here, today seeing that the last deal that went through got declined. They are not publicly saying why they would not let TD Bank buy First Horizon Bank, but that there was some concerns they had. So I think the bigger issue for us in banking is scale matters. The cost of technology to run systems today that clients expect and the cost of preventing fraud is just astronomical, and it's increasing quarter after quarter. You heard last year a lot of regional banks increased their fraud costs. And with scale, you have the ability to better handle the client needs and prevent fraud. And I think that's one of the big ones that Discover and Capital One have been talking about, is how do they compete in the market without that scale?
If regulators do sign off on the Capital One deal, are you looking to be an acquirer or are you looking to be acquired? Are there talks going on currently ahead of that potential allowance from regulators?
For us, no. We are happy to be running First Horizon. We're celebrating our 160th anniversary next month. Our company is really excited about our franchise. We're continuing to build our momentum in the marketplace. We're a Southeast regional bank. There's nowhere better to be the Southeast markets right now. We have the top market growth share, and we look at population growth, economic growth, and so we are not in merger talks right now. We don't have any desire to do one in the near term. Longer term, as we start to see M&A open up, we would look at what's opportunistic for us. The bigger thing for us is that $100 billion line for the capital bank capital rules with Basel III. We really have to sit back and say, what is Basel III going to get implemented at? And what will that cost us going from an $83 billion bank to something over 100 with our next acquisition?
So what's the target? What's the sweet spot in terms of size, in terms of the types of businesses that you'd be in?
Well, for banks, I think JP Morgan is the only one that thinks they have enough size. If you're a $100 billion bank, you want to be 200. If you're under a $200 billion bank, you say you want to be 500. And the $500 and $600 billion banks are saying they want to be a billion, right? Or a trillion. So I don't think right now anybody feels they're big enough. I think Jamie Dimon would love to do another merger. Scale just matters, right? It is such, the game of banking is more and more expense coming in and more regulation that's impacting our ability to make money, whether it's the current interchange charges, the cap on, client overdraft fees. So revenue is getting capped as expenses continue to go up. And so scale is one way that we can improve shareholder value by being able to spread those costs across a bigger client base.
Do you think a change at the White House would change the mood music in Washington towards regulation if Trump were to win again?
You know, we've spent a lot of time talking about that with a lot of the, agencies and a lot of the policy groups we work with, and we're just not sure. We're not hearing a lot out of this campaign trail about how they will think about mergers going forward. It was a big one in the last, when Trump won the first time, he said, we're going to make it easier to do mergers, we're going to be open. We're not hearing that rhetoric this time, and so we really don't have a lot of indication just yet as to whether we would see any change with a possible Trump or Haley campaign.